All right, well, in Tinseltown, it used to be that every new summer movie crop outpaced the summer before. Last summer, movie attendance fell about 2%. The big studios are hoping this summer they're going to see numbers even higher than they were a couple of years ago.
All of this summer movie hype, makes you wonder who's cashing in on those theaters. One of the companies in a position to do so, Entertainment Properties Trust. It's a REIT that owns about 49 movie megaplexes in 20 states.
What's a megaplex, Pat?
Big theater.
Big theater. David Brain is the company's CEO. Joins us now from Kansas City, Missouri. David, good to see you.
Good to see you guys. Thank you.
Let's answer that question. Is that just a lot of theaters in one place? This is these new entertainment centers almost. They've got restaurants and stuff for the whole family to do.
It is. A megaplex really is just a high selection at a single location. It's a lot like other retail category killer stores that offer you a great selection at a single destination. And that's really what a megaplex is as compared to a multiplex. And then it adds in the stadium seating, which everybody who tries it loves it. But now it's going even beyond that to create an evening destination with selection not only for the movies, but also for dining. Very often it's dining or other activities. And that's what people are looking for when they go out. They're looking for selection, convenience, and convenience translates into having all those things available at a single location, not having to run around for it.
So, Devin, we ran through the big movies coming out this summer, which, of course, is what the studios live and die by. Does any of that matter to you? I mean, other than the overall health of the movie business and the interest of moviegoers on the long term, are your deals structured such that you have a share of revenue, whether it's a good box office summer or a bad box office summer, or are you steady as she goes because of the way the leases are structured?
We like to say both. We're steady as she goes to about 98% of our revenues. We have a little bit of upside participation, about 2 to 2.5% of our revenues last year. As the box office grows, because we're over break points in our participation rents in many places, that starts adding more and more. But it certainly is not anything that could ever disturb our cash flow or our dividend yield. But we do have an upside, and most of our leases are structured for 20-year periods. So as we go over those break points and box office keeps growing like it has on a compound basis of 6 to 7% over the last 10 years, those things will become more and more prevalent and ultimately will be more part of the landscape for us. But right now, it's just a small piece.
David, the issue here, though, is that unlike many other REITs with office buildings, residences, shopping malls, the movie theater industry, the movie industry has been remarkably stable through its history. The movie cinema business has not been. Theater companies have gone bankrupt. Are you worried that they could price themselves out of the market? What's your interest in the elasticity of demand as ticket prices go up, as concession prices go up? You may have 20-year leases, but some of these people might price themselves out of a reasonable market.
Well, we're a long way from pricing ourselves out. Let's just look at the average ticket in the U.S. is $6 right now, and that compares with about a $50 price point per capita for admission of professional sports or Broadway, live performance shows or concerts. So it's a long way for the production value, for a 2-hour entertainment value, a long way from being priced out. And just back to your point about guys going bankrupt, there never was a retailer, a cinema operator go bankrupt before the 90s. In the 90s, they all went into bankruptcy really because of the megaplex and the success of the store format. And people were anxious to reject their old small screen, small selection locations, and they did that through the bankruptcy court. But really, during that whole time, customer fundamentals were very steady, and it was really a matter of restructuring their financial obligations much more than it ever was anything having to do with their pricing or customer attraction.
And some of that business difficulty that the theater operators went through actually was a net benefit for you, correct? Because you had a chance to put these lease deals together on properties they wanted to be in rather than the ones that they were in.
Exactly. It was a net benefit for us. We have always been, the company was founded in '97, and we've always been about the new style, the new generation of stores, the megaplex. And so the rejection of the old stores just allowed exactly that migration to accelerate a little faster and for us to grow a little faster.
David, good to see you. Thanks for joining us.
Thank you for having me. I enjoyed it.
David Brain's the CEO of Entertainment Properties.